Good afternoon. This is Ken Long at Tortoise Capital with a review of the weekend trading report for July 14th, 2018. Market is in bullish normal conditions. Long-term annual look back on NDX 260, we're well overbought at 85 out of 100, and the 10-day short-term look back also well overbought at 97 out of 100 using that NDX 10. In the market mosaic, price with respect to the 200-day moving average, we're in bullish territory, yellow bullish at 4.36. Slope of the 50 has improved to green bullish 0.53. ADX is a neutral 17.0 in terms of strength of trend. The risk index is the 30-period moving average of the VIX divided by the 10-period. 1.0 is the boundary between risk on and risk off. That current reading is at 1.004, so we're ever so slightly into risk on. We take that score and look back 5,000 trading days, find the average and standard deviation in order to compute the risk Z to normalize that indicator. And we have a Z-score or a risk Z of minus 0.05. You can see here a 90-day histogram of that indicator. We are coming out of winter out of spring and into the summer. This is a favorable condition for long side swing trading, especially after a move down here beyond -1 SD. These are the holdings for July for the blended monthly rebalancing, emphasizing all the U.S. tech, small caps, and real estate. These are the leading performers as of Friday's closing prices. Again, so the winners are still winning for these different populations. In ETF2, the theoretical exposure remains at 40%. We're going to look at some blended monthly rebalancing portfolio performances now. Again, you see the top three performers: tech, the small caps, and U.S. real estate. About a half of the ETF 13 are on cash signal based on price below their 4-month moving average. That's all the internationals. ETF 32, same thing, about 50-50 buy versus cash. It's still tech. Now it's tech and discretionary and a Russell and real estate. This performance in tech still looks promising. We're seeing some strength in Brazil, sort of an extreme condition that is beginning to heal slightly, and so there's some intraday and some swing trades we've been able to capitalize on this week that is part of this recovery after just a horrendous longer-term performance. You can see even the 1-month performance in Brazil is in the white, so it's in the upper half of this symbol stack, and then the 1 week has been exceptional in the green. So in the Dow 30, again, about half and half buying versus cash. Visa, Microsoft, Boeing, Disney, and United Tech were the winners this week. Be looking for more momentum and follow through from there. Among the sector spiders: software, technology, aerospace, consumer staples starting to also make a turnaround. So this is one of those, it's been horrible, above average, and then well above average. So that may be a turnaround sign in staples, and even the home builders might be earlier in that phase, red leading to yellow to white. In ETF Max, so this is looking at 500 ETFs in the outperformers. Internet Index, healthcare, computing, and software all remain strong. Notice a potential turnaround here in energy that has been green and now is starting to see some momentum being reversed. See that in oil. And again, power shares oil. Market health check. The vertical blue lines are 10, 20, 30, 40, and 50 days worth of look back. The horizontal red lines are support levels that have held. I've been toying with this way to array the support regions by looking at these turning points, the hump and then the belly of the dragon. So this little support level here that didn't fail, that went up into here. So that also pretty much held here in the belly of the dragon. Looks like the belly of the dragon there. So this 271 looks to me like a really reasonable support level going forward. Now you can see the 10-period regression channel and then the projection forward 4 or 5 days, and then the 30-period from black dot to black dot with an extension. So you can see the short term outperforming the longer term. 284 is in sight, and that will be a complete recovery from this the sell-off of the last 3 or 4 months. In the MACD histogram, you can see that the signal line went below 0 here, but then as it held support and improved, you get that almost a P1 right here. This was the indicator that when it crosses its 10-period signal line, or the 5-period signal line, the moving average, excuse me, the signal line crosses the 5-period moving average below the 0 line and outside of the river, we treat that as a P1 potential turning point. You saw that also when the PSAR flipped. So this was a signal to get long in the pocket here, and this is looking pretty good. I think 284 is in range. And we just crossed the 0 line here, so we're now officially allowed to pick up a long-term bias. We're back to the 270, the long-term fair value, and we just broke through the hump of the dragon here. So this is really a favorable condition. People willing to hold this advanced price over the weekend. So I think this is cautiously optimistic. It's about as optimistic as I ever get, I think. In the ETF2 regional report, these 4 U.S. indexes are all above their 4-month moving average. They're on buys, the rest of the world in cash. That leaves us at 40 and 60 for asset allocation in the theoretical model. We're in bullish normal. The U.S., the S&P at 61 is better than the globals at 40, so it's the U.S. over the world. Inside the U.S., it's tech, small caps, mid caps, then large caps. 2 strongest are tech and small caps. 2 weakest are Latin America, which, however, is improving, and emerging markets. Inside the sector spiders, it's technology and discretionary. I'm looking for some improvement here in consumer staples, going from red to yellow. I think longer term that may be very favorable. One final thing, you might notice that the sector spiders themselves in the U.S. have only 2 that are on cash signals, and the rest are on buy, whereas it's 40-60 the other way in the global. So the U.S. has some broad-based strength. You can see all small caps, technology well above average, everything else above average. Europe is a mixed bag, less Australia. Asia, sorry. And then Europe, mixed bag with some real weakness. Oil's at the end of a really nice bump up. I think real estate has more room to go. ETF top 30. You can find various strategies for swing trading and then even intraday trading. To a lesser extent, the longer term position trading on the basis of how we're looking at the strength and the consistency rating. So biotech in the green and white would be something that has been on average above average in the white, but has now increased its shorter term strength to green. So it was good and is now great. So here's an opportunity to exploit strength in new leaders, and this is also one that we would reinforce intraday with turbo trading as new money comes into that area. Same thing you see with the REITs, real estate, Russell 1000 growth, and so forth. ETF liquidity based on average daily dollar volume over the last 30 days. Green is both liquid and volatile enough for very good swing trading. So things like Brazil, energy, the VIX, China, oil and gas, semis, and biotech are all suitable for intraday trading. Shifting to the daily for Monday. No signals in channeling and overreaction. I think there's some candidates here in the Dow, especially in Cisco. That's one. Tech has been strong, but it's at a 10-day max pain, so there's a divergence between the stock and the sector that it's in that should be interesting. Chevron and the energy sector is both suffering a little bit, so that may be a reflection of being affected by that drop in oil. So you see oil, and then oil and gas exploration here, and natural gas linked up with Chevron. So more weakness there in the sector could lead to more weakness in Chevron. There may be some downside momentum there, and maybe even the opportunity to buy it on sale once the energy sector turns. So a couple ways to play that. Dow Tactical 30, plenty of frog quality numbers greater than 3, but nothing, no single digits on the RSI 2. Real leadership here in Microsoft. We have that outperformance on every measured time. And then United Health also looking really good. Big breakout in United Tech and in Walmart on Friday. So that should be of interest. A couple setting up well on the auto framer with Nike and Chevron better than 2-to-1, in one case 6-to-1. See, that's interesting in Nike there. You got on the 1 day and 10 day, it's been underperforming its peers, but has been so strong 1 month, 3 month, and 6 months that this little pullback now could be very favorable. Buying quality on sale with a 6-to-1 reward to risk ratio. That looks very. Here you can see a quick look at Brazil on the swing. So we had been short this thing for the longest time, covered. So 1, 2, 3 short, covered, resumed to short, covered on this big spike down, shorted again, covered, and then stop and reverse when the RLXD. So this is a classic owl entry. So you have a unambiguous move down. You have P1s outside the river. You have the RL10 crosses the dragon. That's the RLXD. You have the 30-period moving average, or the 30-period regression line sloping up, and then the dragon itself sloping up. So you put a entry here, a stop below the RL10 swing low. So that's really about $1.20 worth of risk. Targets I set at Z2 and at the RL270. We'll get up to here eventually. And now I want you to notice how the MACD histogram, this little crossover here and then entry into the river, suggests that this is a building a base of support after this really long downward move. So the fact that it failed to fail further, it then enters this red river, crosses the midstream, comes out of the river, and that's where the PSAR flip occurs, and there's still this great distance to the zero line. So that tells you there's still plenty of room to run. Of course, by inspection you can see that. And now when it leaves the river, that aligns with the owl entry, and now the signal line is almost at zero, getting ready to cross a zero line when you can officially have a long side bias. So if this is the cup, then these are the two checkpoints along the way. I might even put another one here at the Z3 line as a potential support level, and that would actually correspond with this gap down. So if it gets through here, through this purple line, then everybody will see that as a recovery. So we're already well in the money at $34. So that's $1.40. That's about 1.2 R on the swing trade, and then these have had some favorable intraday moves. So this is an example of the kinds of seasonal turning points that we like to look for. An extreme move below the dotted line, and then improvements, almost like using the patterns of RLCO. So you have P1, you have enter the river, cross the mean, depart the river, get back to the long-term zero line for the conservative long side bias, right? So that's a quick look at Brazil. back to the daily. Shift. So here we are in the ETF 30s. Notice the strength in Brazil now. It's starting to come along, outperforming on 1 day and 10 day. At the same time that volatility is declining, so that's favorable for swings as well. And a shift away from precious metals and back towards the things that were suffering. So the NASDAQ, no swing signals per se, but I want you to just notice the indexes and the breakouts on every time frame. This is all extremely favorable for aggressive swings, and a big breakout here from Brazil. So on the long side, and looking at U.S. tech in Brazil. This is promising that there's a daily super pinch now in IWM, so it's the width of the river is extremely compressed. That's favorable. Notice how on the most positive Z stretches, some strength here in Mexico, which had been getting hammered. XLP had been getting hammered, so this is a turnaround, and Microsoft leading the way. Negative Z stretches. This is the anomaly here. Cisco on the negative side. Expanded pinch boxes. These are the very strong directional moves that create wide rivers. So those have been exceptionally directional swing moves. And then small caps. Let's take a look at small caps. So this is what a super pinch on the daily chart looks like in IWM. You have a narrowing Z3 lines. You have the 270, the 90, the 30, and the 10 all within a nice range of compression in here. And so this is a moment of pause after nice long moves. Notice the pocket. This is actually, there's an owl right here, then a pocket re-entry, pocket re-entry. This is forming a pocket here as well. I like this. This is a nice place to buy any new resumption of gains. You have the MACD histogram finds support at the 0 line, and now is above its 5-period moving average, and there's still room for it to go based on it being south of that river. So this is very favorable. Any positive momentum should be exploited here, and I would use the belly of the dragon as a stop for the swing. Okay, back to the pinch and stretch. Excuse me. Standard setups in the auto framer and the regression line fractal. You can see the winners and losers based on price relative to fair value. The top shelf, these are the deep value plays. So Cisco is in that mode, as is Brazil. 7.5 ATRs away from its long-term fair value. So even using a 2 ATR as a buffer, you still have an easy 3-to-1 reward to risk ratio there. And the ones at the bottom shelf are the ones that are well beyond their fair value and are cooling off. And the daily squeezes, these are the ones that had a very compressed range on Friday, and then if they just get a normal average range kind of a move or a range stat move, you get a really large daily candles, potential for nice breakout here. So things like McDonald's, Oracle, small caps. I really like small caps right now. Looking good. All right, that's everything I want to cover for this weekend. Keep your risk measured and your powder dry. Plenty to look forward to going forward.